Hey, good morning. This is Vance Williams out of the Seattle area. I want to let you know that it's Thursday, May 31st, 2016. What else? That's probably good enough. We had a bit of hyper volatility this morning with the release of private ADP job numbers. The numbers came in at expectation, but the anticipation leading up to this information sometimes creates positioning, and the hyper volatility is created by the reaction to that process. But the private numbers were neutral once they were released. This, I would say, is positive for the US dollar because we're working with a positive US dollar sentiment, and the status based upon the ADP remained unchanged. Now, keep in mind that the official employment numbers will be released tomorrow at 8:30 a.m. Eastern Time, and this is also likely to create hyper volatility. And the importance of recognizing this is it's a risk factor. It increases your exposure to risk. Kind of looking around, oil and gold remain the same in the big picture. And so now let's take a look at price. First, the pound. As you can see during the Asian session, the pound did drop. And so far today, since London Open, it's just been in a range, just hasn't done much of anything. It's still looking like the UK will exit the Eurozone. And so this has been a big part of the reversal of the climb for the pound value. I mean, if you just put it up against the US dollar, it's it's not matching up in terms of performance of the economies, but it was driving up because it looked like the Great Britain was going to stay a part of the Eurozone, and now it's kind of leaning towards, well, maybe they're not going to. So that's just added to the U.S. dollar sentiment that we're looking at here. They have not, however, taken any positions yet this morning. So there's no trade here. I guess what you could look for is I like the 30-minute candle bodies here, but I'd probably drop to 5 here to look for a key level. And it's a little bit choppy. I'm going to just go ahead and let's see when that ADP data was. That was at 8:30. Boy, it did not move much during that 8:30 release. Didn't create, but what I want to look at is here, see did something happen during the release, and it didn't. So we end up basically with a common area right here. I'm going to go with this. It's going to be 144.67. So look for basically a 5-minute candle to close above there, showing a change and a buyer advantage there. On the lower side, going to go back out to the 30-minute. Oh, we got a bit of a delay on the load here for some reason. Oh, there we go. We got a low here there, and the reason why this is important is not because it's a support. It's because there's going to be orders here in this area just above it. Let's just go ahead and mark it. You know, I wish this wasn't the case, but it is. You're going to have some orders. You're going to have some machine trades that automatically look to get a couple of pips in this area. You've got an area right here. Right here. And then you've got, you basically got the actual employment numbers coming up at 8:30 a.m. tomorrow. But I would want to see, let's see how big that distance is between here and here. It's 26 pips. So there is a possibility that if you've got a, let's drop down to 5 and look at that again. Is pretty consistent. You see, it's the same level, same price. The buyers get very, very strong around 144.19. So a close through this, a small close through this, would give you about 25 pips of room before you get to the next serious round of orders. Let's say 20. So that's something that you could watch for if it closes under here. And then, of course, let me clean this up a little bit again. Then, of course, a move below here, right? All right, so moving over to the euro. The euro is showing signs of a trend change right here in favor of the dollar. I think I talked about how this was reaching this former price level right here, and so it was likely that the euro would turn there. We're kind of in the middle of that movement right now, but with, you know, the sentiment is strong U.S. dollar. The actual relationship between the economies is strong U.S. dollar. But then again, we have that those employment numbers on the horizon. Okay, so let's drop down to the 5 minute and let's see what happened. Now, keep in mind that all of this movement is a counter trend. In other words, the balance of the money, the short-term money that's in play from 3 to 10 days was balanced to the top side. And this is also an important risk factor that increases your risk a little bit, especially when you're considering trading against that balance. Now, this area right here, you can see this is a lot of speculation around 8:30. So right around U.S. Open. Wasn't a lot of movement, I guess, at the release of ADP, which was, that's usually at 8:15, but let me double check that they haven't changed that. Just a second. 8:15, no, 8:50. So actually, this volatility I was looking at, I assumed was ADP. Watch those assumptions, guys. You got to be careful. No assumptions are allowed in Forex trading. Got to be very careful about that. So I did make an assumption there that that was at 8:15. It was not. It was at the U.S. Open. And let's see what numbers were released at U.S. Open, 8:30. That was the unemployment claims, and also unemployment claims were as expected. So it must have been just, you know, the U.S. market making some moves right there as Draghi was going to begin an ECB press conference. So anyway, I'm not really sure, but it doesn't matter in terms of trades. If you're seeing some hyper volatility, or if you've got something that's potentially going to create some hyper volatility, you want to kind of take your hands off the controls, so to speak. All right, so after this shakes out, this comes up, touches off this level, picks up a lot of sell orders, comes down here, and it's just closed here. Now, when you're moving super fast, and this is something that I almost hesitate to, hang on, let me do one thing here. This is something I almost hesitate. It's not something I actually do feel some hesitation in mentioning this because I rarely do it. But when you're having super fast moment, one of the things that I teach in my book and also to the traders over the years is when it's super fast, and you have to learn, well, what is the definition of super fast? Well, that comes with experience. But when it's moving super fast, I will drop to the 1 minute if the sentiment is very clear, and I'll look at this key level and look for a 1 minute to close, because when the sentiment is very clear and it's moving super fast, if you wait for a 5 minute to show an advantage, you know, sometimes it'll move 25, 30 pips, and then basically the bus left without you. So for example here, if you went off of this 1 minute, or let's say you even adjusted down here and said, hey, this is important, and you went off of this one, let's see how much room you had to get a trade in. Your stop could be up in here, protected by this this area where the sellers are likely to be very strong. If you got in right there, it would have gave you about 12 pips of room to get into a trade. So plenty of room to both maximize your risk to equity in terms of, you know, the 2.5 or 1%, whatever you're risking on your account, and also get your stop protected and go for a reasonably achievable target. Right now, as you can see, we've moved back into that area where previously we thought there would be sellers. Now, there has not been a meaningful retrace of 38.2 or more on this move. So that could be a factor as well, as we pull a fib on there and we see that price right now has pulled back to around the 50% level and this former area here. There will be some selling interest in that area. We are about 50 minutes from London close. This means traders will likely be winding up their positions for the weekend in London. So this would point not to just profit taking during a trading session, but possibly profit taking to basically call it a week. So that could promote a little bit more range trading ahead of ADP non-farm. Let's see, did I say that that's the end of the week? No, I got that wrong. They're going to be around for ADP in the morning, but nonetheless, they might be closing out for the day. Huh, wow, end of the week. Not sure what's going on with me this morning, but I got the data right. Got the data right. All right. Yeah, just the pound continues to kind of explore this range here. So you're seeing a little bit of a US dollar correction here in terms of the current movement, a little bit of weakening going back the other way. But don't be concerned about too much of that stuff. What you're looking for is the key levels that I talked about earlier. That's going to do it for me for the week. Let me just show you real quick. If you don't have my book, Forex Legacy, let me show you where you can get that. Go to forexartofwar.com. You can find me pretty much anywhere on the web, but it's this yellow rectangle here. You'll notice that when you click on it, nobody asks for an email. The reason why is because I don't have anything meaningful for sale. There's no move to get you to upgrade to anything like that. I do have like a $10 a month fee if you want to be in the community, but the book is, there's no strings attached. And I think you'll find this is one of the most valuable Forex trading books ever written. You read it, you decide for yourself. But I will tell you that this is the real deal about how it works. So by the time you finish reading the book, you might realize that Forex trading is a little harder than maybe some people led you to believe. But at the same time, if it's something that you're really aspiring to do, it's something that the book will give you some important guidelines on how to achieve that. That's it. You guys have a great one. You can always write to me with any questions. It's my name, Vance Williams, @myself.com. So Vance Williams @myself.com. Me, myself, and I. Now you can remember it. You guys have a great one. Thank you.